Hi everybody, it's Jennifer Smith at Murphy Business in Cape Girardeau, and today we are talking about the coronavirus. Who's not talking about the coronavirus, right? So we're going to jump on the bandwagon, but not from a medical perspective because we're not qualified for that. We're going to talk about it from an economic perspective. So last week, the Federal Reserve cut interest rates by 0.5 point. Or what's called 50 basis points. And for those of you that didn't study this in school, a basis point is just 0.01%. It's 1/100th of a point. So 50 basis points, 0.5%. We went from 4.75 on the prime lending rate to 4.25. And basically what that means is if you're borrowing, say $100,000 a year, you're going to save about $500 a year with this rate cut. So it's substantial, especially when you get up into, millions of dollars. We had a client call last week and they want to refinance several $1 million. That's real money in savings. So we're going to talk today not about all of the challenges associated with the coronavirus, but also the opportunities that are present for people who want to take advantage of the unintended consequence of the rate cut. So you may not have really felt the impact of this yet. Folks like these big national, multinational, global companies, they're feeling it. They're feeling it because if they do business in Asia, certain parts of Europe, if they're in the import-export business, or in an area of Asia, for instance, where public gatherings have been completely halted and forbidden by the government, or if you're in the import-export business, whatever, these big companies that rely on revenue and income from the Asian markets are essentially kind of, they're almost dead in the water from the Asian standpoint. And so what that means is they're having to rethink on the fly their 2020 budgets. They're having to think about resources and their spending and how to support team members over there, things like that. So it's really kind of thrown a curveball at a lot of our companies that do business outside of our United States borders. So it's only a matter of time. We've had kind of a recent little tumble with the stock market. Look for some more of that coming up because as these big global companies that make up the Fortune 500, Fortune 50, Fortune 10, as they start to have troubles and concerns and unforeseen expenses related to this coronavirus, it will start impacting you personally through your 401k and your investments, because those typically are bigger companies that make up some of those index funds and things like that. So let's move to the opportunities. We see there are 4 areas just right now where you can start leveraging some of the opportunities. Number 1 is in the refinancing. So if you have debt that is at, I won't say a high interest rate because we don't see a lot of high interest rate debt anymore, but a higher interest rate, you can look at refinancing that debt, get it down and save some money that way. If you're not sure who to call for the refinance of debt, just let us know. We've got lots of partners nationally, regionally, and locally where we can help connect you with lenders that can help repackage, restructure, refinance that debt. The second area is in the area of business expansion. If you want to grow and you want to have a low cost of funds involved with that growth, now's a really good time to do it. Things are a little bit scary in terms of getting outside of the U.S., but expansion inside the U.S., as long as you're not involved with import-export, is really a pretty good idea. This interest rate cut can help with that. The third area is if you're looking to buy a business. So a lot of folks, even if they have cash to buy a business, they're still opting to put down a minimal level of cash and to finance because of the low interest rates, and that just got more attractive. So it's a good time to be a buyer. And number 4, it's also a good time to be a seller. We've got sellers right now that are small, kind of one-man operations if you want to be an owner-operator. And we've got really fairly large companies that we're trying to sell right now with lots of infrastructure and cash flow. We even have a business in Canada that we're working with right now to sell. So it's not even just in the United States. So if you're looking to sell, you're thinking, well, gosh, I'm not going to be taking on any more debt. But put yourself in the shoes of the buyer. The buyer wants to leverage debt very often in the case of a purchase. So it's a good time to be a seller because the buyers are set up well. So those are our 4 tips for today. Hopefully that will help you think about how you can leverage this a little bit. And we look forward to talking with you soon. If we can do anything for you, please reach out. Have a wonderful day. We'll talk to you soon. Bye-bye.